All right, guys, I got a bone to pick with one of you.
Oh,
Yeah.
Scared.
Whose
what
bright
did
idea
I
was
do?
it? What didn't you do? Whose bright idea was it to put us on camera and put these on YouTube? I watched one the other day, and I got to tell you guys, I need to start working out. I need some sun. I need some VD, vitamin D. I need, yeah.
Yeah.
Should we do
This was
maybe
your
like a
idea. I just
training
want to be clear,
session?
Doug. This is all you.
Was it? Sounds like maybe
You
something.
need to
you
look in
pushed
the
this.
mirror.
Yeah.
You brought this on yourself, Doug. Yep.
All right. Hey, we just came off a really nice couple weeks ago InsurTech New York session. I don't know if we talked about it on the last podcast, but that was a good show. Not just trying to get free tickets to this. David and Tony, friends of the show, did a really good job putting, I think this is their 5th or 6th conference now.
Wow.
Impressive. Walked away with a lot of good new connections, saw some old friends. Dylan, I know you don't like coming up to New York. You were missed though.
That had nothing to do with it. I was in Costa Rica, enjoying myself, I guess I was rappelling down waterfalls probably while you're taking meetings. I was zip lining, riding horses, snorkeling. It was lovely. So sorry to all the people I missed.
But you are missing the next New York conference as well. It's a pattern that's emerging.
This is awkward. Yes, I am.
Yeah.
I've never missed an InsurTech Insights as far as I know. All right, I think I've been to every single one, and I am unfortunately missing it. And I think we're going to have a big announcement sometime in the near future about that and Age of the MGA.
About Insights. But I know, Chris and Rory and Ryan, good friends of the show, and they might be hearing this for the first time that you're not going to be making it.
Very awkward. Yeah.
This is messed up. I hate to put you on the hot seat, but this is me getting you back for putting us on video.
Okay. Well, listen, I will be in New York in May. I will be at the Eagle Ventures. I'm going to butcher the name, Insurance Summit. It's their first one. I can't remember the exact naming. So thank you, Adam Chadroff, for setting that up for me. And so I will be in New York then. And that's probably about when this will air. I don't know, somewhere close to
right around then. Yeah, it's like a month from now. Dylan, I'll be there as well. We'll have to hang out. We'll go to your favorite pizza place.
I love it.
Right by
Pizza Suprema
Station. Yeah, Pizza Suprema.
Delicious.
Maybe we can get some free pizza. I don't know if these guys listen to the podcast.
I really don't think they care about MGAs.
They should, though. They should. We could probably help them lower their insurance rates.
They have a line out the door, and I don't think they care about us at all. But
great
just to be
pizza.
clear,
You introduced me to that.
I do love it. I think it's one of the best. There's also this little Roman style tagliatelle pizza that's a little bit north of that. But I think Pizza Suprema for New York slice is the best in my opinion. Though I have not been to Joe's, and one of my colleagues, he's a Long Island guy and has lived in New York essentially his entire life. And I gotta say, he says Joe's. So I really got to get over there.
You know what we should do? We should try, maybe for Insights, maybe we should do a walking pizza tour led by you. We'll get Chris to be the taste tester. Who's that? The sports blogger that goes around trying pizzas out? Dave Partney.
Yeah, Barstool.
Yeah,
Barstool. Yeah.
Chris can be our Dave Partney. Chris from Insights. I'm sure he's going to have a ton of time while running this conference, and so we'll just grab him for this. And we'll
get Michael Yetko in. Sorry, that's the colleague I was referring to. I think he would be absolutely great at this. He's a personable guy, and he loves pizza. He has a passion for New York pizza. So I think we already have our guy.
Let's get it together then. That sounds like a good time.
Right.
So, Peter, we have a guest on who's in New York. I don't know what his thoughts on pizza are. We should ask him when
first question. Yeah.
But maybe you can tell us a bit about the guest that's coming on.
Yeah. So today is slightly different for the Age of the MGA. We haven't got an MGA founder in themselves, but we've got someone who's can really truly call themselves an expert in the space. So we talk a lot on the show about statistics of how MGAs are growing and what the market is doing. So we thought we'd bring in someone whose job is purely to research and give insights on the space in the sector. And William Pitt from Lexicon Associates does exactly that. They've released a couple of great reports just recently on both the fronting market and on the MGA sector itself. William's also been in the market in various roles, which we'll get into. So really excited to hear just how tangible some of these results about this boom in MGAs that we keep talking about are statistically.
Nice. All right.
I love it. Let's do it.
Everyone. All right.
Yeah. Hi, everyone. It's that time of the week again. Your Age of the MGA fix is here for you. You've probably been listening for a while now, so if you have, please connect on LinkedIn. Make sure you subscribe on the usual channels on YouTube and Spotify. Today, I'm delighted because I'm not outnumbered by our US colleagues. We've got a fellow Brit in William Pitt from Lexicon Associates joining us. I think this is going to be fascinating because there's a lot bound about how well this sector is performing and thriving, but we put little statistical evidence behind that. At least we've done that so far on this show, and that all changes today because William and his partners and his team, their job is to produce insights and reports and data on this fascinating topic, and we're going to get into that and so much more about William's story and history and passion for the space. So firstly, welcome, William. Thanks very much for joining us.
Well, thank you very much for having me, Peter. I'm delighted to be with you.
Yeah, pleasure. We'd love to, first of all, hear a little bit about you, your background, how you got to this point in your career.
Sure. The old thing about insurance is that people tend to fall into insurance. And if you go way back in my history, I was more interested in fine art than insurance. And I joined an insurance broker in the London market a long time ago that was setting up a fine art insurance department. And I thought that would be very exciting. And it was very interesting. And I really got into the industry through that. But that sort of set a little bit of a kind of leitmotif, Peter, for my career, because that is very much part of the sort of specialty insurance market as it's now known. And so I've been involved in specialty insurance throughout my career, a lot to do with Lloyd's. I worked at Lloyd's for a period when Lloyd's had some serious challenges in the late 1990s. And I worked for a long time as chief marketing officer at Beazley as it was growing its business here in the US and globally. So that is a market that I know very well. And that is the means through which I came into contact initially with these interesting constructs, MGAs, that have evolved significantly through my career. And that's the area which we're really now focusing on as a company.
William, it's so interesting, your story of falling into insurance. I like to poke fun of Peter with how sophisticated the Brits are. I feel like in the US, we fall into insurance, they're like agriculture or some type of manufacturing. And so the story that we have for you, a Brit falling into insurance through fine art, is very on brand, at least for me.
I think the normal thing, which was not the case with me, but is the case across the pond, is family relationships, right? And so that's very often how people get into insurance in the London market as well as in the US. But that was not, I did not have family connection in the industry.
Yeah. One thing before we move on, because a lot of the audience may not be familiar with what happened in Lloyd's in the 90s. And I think it's a really interesting anecdote story to get into. That was a pretty intense time for the market, right, William? Or the LMX spiral and these things that were happening. Could you maybe touch on that a little bit?
Sure. Well, it was a near-death experience for the market, basically, because it was hit. What I'll try to do, Peter, I think there are ways in which it's relevant today. So I'll sort of try and segue into that a little bit. But the market was hit by long-tail liabilities from pollution and asbestos-related liabilities that had been written a very long time ago under a wording that meant that the claims could come back and bite you 30, 40, 50 years later. And it was also hit, as you referred to the LMX spiral, it was hit by catastrophe losses from a whole sequence of catastrophes where the market did not really manage its aggregate exposures very well, and they landed up on a relatively small number of syndicates that couldn't afford to cover those liabilities. And so what Lloyd's did with the help of some Charles Roxburgh, actually, who is now the new chairman of Lloyd's, and he was with McKinsey at the time, and Freshfields and other law firms, was they created a sort of good bank, bad bank type structure involving the creation of a company called Equitas to take on all of those prior year liabilities, 92 and prior year liabilities as they were called, and reinsure them in the biggest reinsurance transaction in history into Equitas. And so that was all the restructuring of Lloyd's, and that enabled the continuing Lloyd's market to trade forward without the encumbrance of those old year liabilities. And Equitas succeeded in managing those liabilities very well, and it really was a very successful restructuring of the market. From the point of view of how it sort of relates to MGAs, I think it's kind of interesting because people have said, and I think rightly, that the old Lloyd's managing agency model, and Lloyd's still runs through managing agents, managing syndicates, is not dissimilar in some ways to the MGA model. You've got a separation, you had in those days a separation of the capital, that the names, the private investors would go on syndicates, and the managing agency would actually manage the business with that capital behind them. And they were small businesses generally. They were nimble. They were, they had many of the sort of cultural characteristics and operational characteristics of MGAs today. And I think we can see that tradition in, a company like Fidelis, perhaps in the London market, and some of the other MGAs that we see today. They are not dissimilar in some ways to the old managing agency model at Lloyd's.
So now beautiful history, so thank you. But we've been talking essentially everything about Lloyd's, London, English incidents. That's New York behind you now, right?
It is. Yes, that is Midtown Manhattan. Yeah.
When did you make the move to the US?
A long time ago. It was during the time we were talking about. Lloyd's did not have an office here in New York at the time, and so I was involved in the setting up of the original Lloyd's office in Manhattan.
All right, so you have 20 plus years under your belt as a New Yorker now, right? And,
we lived in Connecticut for most of the time, but yes.
Okay, all right. Well, hey, that's a whole different set of pizza. But in New York, what's your favorite slice in Manhattan?
In terms of pizza?
Yes.
Well, I'm still quite loyal to the pizzas that we used to get in New Haven, to be honest with you.
Every guy from Connecticut says that about New York pizza.
So. William, I thought you were going to say Pizza Express, like you head back to London just for a Pizza Express.
And definitely not Pizza Express. But no, I like the New Haven pizzas. But no, I don't really have a favorite in New York. I mean, the New York, obviously, you've got everything at your doorstep, and I love the delivery culture here. Where you can get whatever you like. You can get fantastic sushi or anything like that. So we're enjoying that aspect of New York. But it's relatively new. I've only been here for a year and a bit. So I'm just getting used to living in the city.
All right. Well, Doug, you'll have to give him pizza recommendations from your neck of the woods.
We'll have to have him on the pizza walking tour.
That would be great.
So William, I'm up in Connecticut now, but long term, like I lived in Brooklyn forever and in downtown. Definitely miss it. And yeah, the pizza's different, but my office is still in New York, so I get down often enough where I can have a slice. I think it would be interesting maybe to talk a little bit about, I want to get into the stats figures, and before we were doing a little pre-show stuff, and you dropped my favorite country in the world, so we'll get into that in a little bit. But I'd love to talk maybe about the concept of whether this is just in the US or more globally, because you talked about the managing agent, but I think there's, for MGAs, as they grow here in the US, thinking about different options they have and maybe how to get more involved in the risk and monetize that for themselves. And so I think often people go towards like an RRG or a captive, but I think there's really interesting concepts of like cover holder status and other vehicles that are maybe more commonly seen in Lloyd's and the Lloyd's market. And I'd love to maybe just get your sense on some of those, or maybe just kind of a quick primer on like what those are as far as they relate to the US market.
So, Doug, it's a sort of really interesting laboratory for capital structures now, I think. We've seen, particularly in the hard market, there are a couple of reasons, I think, why MGAs want to have more skin in the game than perhaps they've had in the past. The first one, and really important one, of course, is this sort of alignment with their third-party capacity providers. And I think that's incredibly important. And so I think if you have a reinsurance captive aligned with your other reinsurers, that's a source of great encouragement and confidence to your reinsurance panel. And so that's a long-standing thing, but that part of the market has been evolving, and there's increasing volume, increasing share of capacity, if you like, for MGAs provided through that channel. And then you can have your own insurance company, you can have your own Lloyd's syndicate, to your point. So CFC, which is one of the largest MGAs, has its own Lloyd's syndicate, and I think the process of setting up a Lloyd's syndicate has become easier, and I think Lloyd's has made it very clear that they're very keen to have some of these MGAs active in the market.
Was that there's like a MGA in a box or Blueprint 2.0 or something? This is what my access to the Lloyd's market was. I used to have an MGA, and very early on we were trying to do some more work with Lloyd's, and this is like 2018, 2019. So I think at that time what was it, Blueprint 2.0 or something, was this concept of being able
Well, Blueprint 2 had a thing called a syndicate in a box.
Syndicates, there we go. So,
Which was a means through which you could set up a syndicate. The idea was it could be a syndicate that could be based anywhere. It could be in Colorado, it could be in Australia, it could be anywhere. And it was sort of fairly tightly constrained, but the idea was that it would be writing sort of innovative coverages that wouldn't otherwise be written at Lloyd's. So it was a sort of an innovation play to an extent. And it was part, as you say, of Blueprint 2. And a bunch of players in the market, Munich Re and others, went down that path. Munich Re obviously had Lloyd syndicates as well. It was attracted to that for certain business that it was wanted to write. But now I think the process overall, Doug, and I can't go into huge detail on this, I think the process overall has become, I think the market is more friendly towards MGAs. And this is what I've heard kind of anecdotally from a lot of people who've engaged with Lloyd's thinking about setting up a syndicate. The process whereby you do that is more straightforward than it was, and the timelines are shorter, and it's an easier process. So that's just one capital option, right? So I think if you break them all down, you've got the reinsurance captives, you can set up an insurance company, you can set up an E&S company here. In the UK, there are insurance companies set up in Gibraltar that are part of MGA groups. And then you have another interesting, uniquely American thing, which quite a lot of organizations are going for now, which is a reciprocal exchange. So a reciprocal exchange is a mutual, and it's managed by a company called an entity called the Attorney in Fact. And there have been some extremely successful and substantial reciprocal exchanges in the US market. The Farmers Exchanges, which is owned by Zurich, the Attorney in Fact is owned by Zurich, is one of the biggest ones. But there have been a lot that have grown quite significantly in the property market in particular. And so there are a number of MGAs that have said, well, that is quite an attractive way of getting truly long-term capital, long-term capacity, because that is a mutual. And if you have a connection with the Attorney in Fact that manages that, you've got that secure capacity. And all these things are about having durable capacity. That's the Achilles heel of the MGA model, as you well know. And so, that's what people are thinking about, I think. And the other thing with reciprocal exchanges, in particular in a very distressed property market, is there really might not be any other way of getting capacity to write some of these risks.
Yeah. We're going to have in a couple of weeks, we'll have an RRG on, which is MGA and RRG for homeowners in Texas. So super interesting model there. So I think we've talked about the kind of the back end capital, but William, you have a lot of stats, and I think your new study that's out is on the fronting side of things. And while it is very important to have robust capital on the back end and friendly capital, and you're providing good results for them, on the flip side, and I see this a lot in smaller MGAs that are trying to maybe contract with larger companies, that front can make a meaningful difference. And you really want to try and have maybe different fronts for different regions, different products, different customers you're working with, depending on the financial rating of the front. And so I would love to start getting into that part of it. And anywhere you want to start is great, but I know you have a lot.
Happy to, Doug. It's been an amazing story. So if you go back, to 2019, you're talking about $5 billion of premium was written through fronting companies then in the US. If you then sort of fast forward to last year, our calculation is 20.3 billion was written by fronting companies through fronting companies last year. So incredible growth, and it has become the kind of the biggest and the most important fuel tank. If you think of the capacity as being the fuel that MGAs need, fuel tank for the MGA sector here in the US. And I think there are a few reasons for that. I think a big part of it is that the fronts are dedicated. Most of these ones that we're talking about are dedicated to fronting, and therefore they're dedicated to the MGA channel. It's inconceivable that a front would unilaterally say, like some insurance companies have said, we're getting out of delegated authority business. You can't do that as a front. You've got to close your doors. That's what you do. And also they don't have in-house competition, if you like, business that they're writing in-house, which potentially could conflict with or compete with the business they're writing on a delegated authority business for MGAs. So I think that those have been factors driving the growth. I think the other factor, important factor, has been that a lot of people looked at the fronting model after State National was sold to Markel and said, well, this is a really attractive way of building value. This is a really interesting opportunity. And that gets into the whole discussion as to whether it's truly a sort of asset light type vehicle like MGAs. And there's been some evolution of that because the fronts have been taking on more risk themselves and increasing their retentions. But that was the motivation, I think, for a lot of people to move into the fronting space over the past 5 years. And the growth has been startling if you look at that. I mean, you look at cyber, for example, which people talk about as the most remarkable growth market in insurance. Well, I think fronting really gives that, it's a different kind of business, but it gives that a run for its money at the growth rates that we've seen.
So just really quickly, because just a few moments ago, we're talking about all the different types of entities that essentially a interested entrepreneur maybe want to build, right? And let's say you've got a producer underwriter who's listening to the show and trying to understand, hey, there's so many different options. Let's say they're US based. When should they build an MGA versus when should they build a different type of entity? Because they have lots of options now. There are, in the US market, there's lots of ways to build a company, to go after and build a great product that they're extremely knowledgeable about. These are lots of times experienced, VPs of underwriting. They're high-level producers. They have large books of business. They want to capitalize on this. When should they pick MGAs and when should they pick one of the other types of entities?
Well, that's a great question, Dylan. I think they should, if they meet the criteria that you talked about, they've got a book of business that they think that they can really target, and they believe that will be a sustainably profitable niche. Then I think that setting up an MGA to do that is the way that the market has been going for a long time now and will continue to be. And the reason is that the complexity and overhead involved with doing that and the value you can create by doing that, the complexity and the overhead is less and the value you can create is much more than by setting up an insurance company of some kind, a balance sheet company to do that.
And the capital requirements are much lower as well.
Yeah, absolutely. So and the EBITDA multiples that MGAs are attracting are still extremely attractive, and so that opportunity to build that value, but it's obviously become a more competitive market. And one of the things that we've been looking at closely is the internationalization, rather an ugly word, but I think that's a fair way to describe it, of the MGA model, and it does have a lot of adherence internationally already, but it's actually expanding, I think, very significantly now in Europe in particular. And so there are markets there which are perhaps less competitive than some of the US markets if you want to build a business of that kind.
So what you just mentioned was niche, which we agree that MGAs should have a niche product. I guess I've also seen, however, MGAs who they may be going after like a subset niche, but they're writing BOPs, right? And they're writing things that are readily available from Hartford and from, many other full-size carriers. And some of them have been more successful than others, right? I guess if you were new into the market, again, some of those companies already have existed now for years. They kind of got in the front end of the MGA space. But if you were building an MGA right now and you were wanting to make contractor BOPs, would you consider an MGA at all? Is that even an option to you?
Well, there's a relatively new option, and I think it's a growing option that people have. And first of all, you have to start with the fundamentals. You have to say, yes, there is an opportunity for us to write this business and harness profitable growth within this business that we can share with our capacity providers. If you can't satisfy that condition, then you shouldn't be trying to set up a kind of total Me Too MGA that's going to compete directly with the Hartford or Travelers or whoever it might be. If you think you can satisfy that condition, one thing you could also think about is whether you want to join an incubator, which is a subset of an MGA platform. And I think that we're moving now, Dylan, into a world where that, I think over time, is likely to become the kind of predominant MGA model, a platform stroke incubator model for the smaller companies, because the attractions of that are significant for all parties. If you're an entrepreneur that wants to set up your BOP business and you have the fundamentals are in place and you really do think you can write the business profitably, I think joining an incubator where you've got access to broader range of capacity sources, you've got support on the operational dimensions, you've got a technology platform into which that you can plug into, so forth, is quite an attractive way to go. It kind of de-risks the enterprise for you a bit. And for capacity providers, they look at those organizations and they say, well, they've already done quite a lot of due diligence to say this is a really good MGA, it's a good business. And so maybe they can get a spread of capacity from, or a spread of risk from, working with one of those incubators or platforms. So I think that is the growth model that we're seeing. I think the standalone MGA, there's a higher bar, right, to say, have we really got something here which is so unique and has got durable value, and we're confident we're not going to be in that terrible position where you sign up a single capacity provider and after a year or two they say, okay, we're out of here, and then you have an absolute crisis trying to replace them. That's the real challenge, I think, for a standalone MGA.
On that topic, Doug. On that topic, if I may say a slight shameless plug, our very own Dylan Brand has set up Bindery Risk to do exactly that, to help these aspiring entrepreneurs launching programs into the market to have help all around the operational side. And fully agree, William, that it's very hard to go alone, and you move away from doing what you're used to doing, which is underwriting good business, to managing 25 other things that go hand in hand with setting up an MGA. So you need a very robust team and advice around you to do that, of which they can absolutely contact Dylan, they can absolutely contact William and get great insights and support around doing that. But what we stress on this show, it's not straightforward. It's a relatively easy entity from the complexity side, and the capacity is not the same in terms of the requirements, but don't be fooled into thinking it's something that's going to be an easy journey for you going from idea to live and action.
The partnership is the hardest part, I think. You can build it, but beyond that, it's finding the stakeholders that are going to help you. Peter, you beat me to the Dylan plug, so I'll second that.
Well, I will actually pause you there, Doug, and return that plug, because Bindery Risk has actually been the core system behind it. Is powered by Laura, which is how I met Peter, and also I've known Doug now for years, and we're actually getting the terse compliance products into Laura, which then I purchase all of those products. So the idea that was the catalyst here for this podcast. It was the concept that there is not a blueprint of how to build the MGA, and to be able to assist people who want to go from idea, from concept to actually writing business and substantial amounts of business. We wanted to help those people that from that idea through a massive growing MGA. And that's why we're talking to experts like you, right? We want people to hear from Lexicon and know that there are sources for data for you to truly understand your market, where you're trying to go, making sure that you have this niche product, making sure that you're making those good decisions to even start the process, because there's plenty of people who need to be dissuaded, right? They don't fully understand what they're stepping into, difficulties of it. And others need to have their original idea dissuaded, or to be dissuaded from their original idea, but they also need to understand, okay, what is a good idea? How do I execute that? And that's what we do on the show. That's who we're talking to constantly, are the people who can get people to those steps. So we, again, greatly appreciate your knowledge.
Well, no, Dylan, I think that's absolutely right. And I mean, I think the space that you're in is going to go on being the really growth sector within the market because of the value that you're providing. I mean, there's two kinds of knowledge, and at some level, there is a secret there that the MGAs are bringing to you or bringing to the markets for capacity, which is how do they write X class of business in a sustainably profitable way. And that could be a class of business that's historically had a horrendous reputation for being somebody that people always lose money on, right? But no, we have access to the best risks in that business. We've got
better data,
whatever the kind of secret source may be. But the adjective there, I think, is important because, that is not universal knowledge. Otherwise, everybody would be writing business on exactly the same basis. But then there's this whole sphere of knowledge, which is exactly what you're talking about, which should not be a great secret. It should be shared. It should exist in order to help companies set up and scale MGAs. And so that's what I'm kind of passionate about, because I do think that these organizations add enormous value in the insurance market. I think they're absolutely central to innovation in insurance and how are we going to tackle risks like climate change related risks and cyber and a lot of these risks which the market has in some ways struggled to deal with. So I think that is all beneficial for the industry. It's growing the business of the industry. But you're absolutely right. There is a terrific amount of, if not willful obfuscation, then at least just mystery about how you do it. And the good news is that there's quite a lot of also best practice out there as to how you do it, and you just need to engage with people who have that knowledge.
If
you think about the stereotypical insurance high-end performer gets paid very well, does have, I think, that secret sauce locked in them somewhere.
Yeah.
And giving them a platform, I think, William, to your point, having an incubator that has all of the operational standards set up, has the compliance ready for you, can plug your secret sauce into that. It de-risks that it makes it worth leaving a 300, 400K a year job and saying, I'm going to go do this. Otherwise, I think it's really hard for people to dislodge themselves. Why would you? Like, the three of us are like pure entrepreneurs. I think we're very crazy people. We probably shouldn't be.
I think Doug, to that extent, you're a little bit perhaps unusual, really, because the other thing about it is, what is your mindset? What is your outlook as an underwriter? And Warren Buffett, in I think the last letter but one, said he didn't want optimists anywhere near his insurance business. You want pessimists, right? He wants people who look on the downside, who can think about downside risks. Now, that is the polar opposite of the proverbial entrepreneurial mindset. So I think that's a fundamental challenge. I think it's even more of a challenge if you're talking about European businesses as well, where I think that the entrepreneurial religion which exists in America is not quite as potent in some countries. And that's not a criticism, or it's just a sort of observation. And I think that the people working in insurance companies are a part of that broader culture.
Yeah, I have people at Mercer, where I used to work. This is 10 years ago.
Okay.
That think I'm still in the middle of a midlife crisis. Asking my
William, I think you just let us know that we all need therapy. So
well, yes, there is a certain lunacy, I think, because you're operating. The other thing about underwriting and entrepreneurship is you're operating as an entrepreneur often in a kind of low data space, right? You just don't have that information about, and this is what we're talking about, but that much information about how best to go about what you're doing. And so there's a little bit of a, well, I'm sure it'll work out and let's just try it. There's that sort of element to the entrepreneurial mindset. But what you want to do, to your point, is help organizations manage those risks as best they can. And they can probably manage them a hell of a lot better if they're working with people who know the terrain really well and have helped other MGAs, get up and running, than if they're going it alone.
Yeah. Well, William, you had mentioned internationalization.
Yeah.
I'd love to jump into a specific country, if you don't mind, just because you had said there's some really interesting things going on. So the Netherlands, where my people are from originally. Still a massive football supporter. Sorry, England. I know you beat us last time, Peter, but we're coming back this year. Yeah, curious about you. Let's dig into that more. You see that maybe as like they're advancing things faster, or they're taking these models and utilizing them more readily.
So just very quickly, if we sort of zoom out and look at the whole globe, right, from an MGA point of view, and where are MGAs active and where are they less active, what you've historically seen is countries that are for historical reasons, been influenced by the UK and the US, have more active MGA markets. So Australia's got a very significant MGA market. Canada's got a significant MGA market. There are a lot of MGAs in South Africa. I think you mentioned you were talking to one of them. There are MGAs in New Zealand as well. In Europe, in continental Europe, the country which has got by far and away the most developed MGA market, it's best to call it sort of delegated authority market, is the Netherlands. And there's a lot of marine business, the risks of that kind, that have historically gone into Lloyd's through cover holder arrangements. When Cuthbert Heath set up the first Lloyd's cover holder, he was a Lloyd's underwriter back in the 19th and early 20th century, first Lloyd's cover holder, he gave the pen, he lent the pen to his agent in Amsterdam. And so it's got a very long history. That was back in the 1920s. And that market evolved and developed. It was a relatively, I think you could call it a sort of relatively primitive MGA market in a sense, because they were really brokers that took a part of their business and turned it into binding authority business, and they got authorization as Lloyd's cover holders, and that's still a big chunk of the market. There's an association called the NVGA, which is the oldest, to my knowledge, the oldest MGA association or oldest cover holders association in the world. It's celebrating its 60th anniversary this year, which is in the Netherlands. And one of the things they do, which is very helpful, is they collate all the data on the amount of business that's transacted this way. So it's north of 5 billion euros of business that was transacted on a delegated authority basis in the Netherlands last year. We don't have those statistics for France or for Germany or for Italy. So they provide that kind of clarity on the market. There are a bunch of MGAs, a lot of MGAs that are really fully fledged MGAs with significant underwriting authority and all the systems that you need to transact business that have evolved in the Netherlands and are now looking at spreading their wings and writing more business, around the European Union.
There's been some very high-profile MGAs come into the European market fairly recently, haven't there? I mean, Descartes come to mind in France, who've been extremely successful with first parametric products and then others, but have grown incredibly well. Interested on your take on that. I know we touched on it, but that is a challenge for me, having worked in an insurance company in Spain, in Barcelona, to see the comfort you get with a corporate job underwriting in Europe versus that risk of the entrepreneurial journey of an MGA. The other challenge I see that I'm interested in as well, because I've seen a shift in this, and I'm not sure, William, if you agree. When I first started in this industry, there was a fear of placing risk with MGAs, right? There was a concern that the capacity wasn't going to be there forever, that the structure was not as secure as an insurance company. And also that, there's been a big focus, again, when I was first started here, about quality of paper and financial ratings of paper. I don't know if this is anecdotal, but there's been a complete shift in that paradigm for me. Everyone's so comfortable with MGAs. The financial rating of a paper seems less important to me today than I think I've ever seen it in my time in insurance. And there is more of this willing for people to go out and start these companies. I guess all of your reports sum that together, right?
There's quite a lot to unpack that, Peter.
Yeah.
I think everything you're saying is true, except apart from one thing. I think people are concerned about the security one way or another, still, but not because the security is being channeled through an MGA per se. If you can say, well, I've got Lloyd's paper behind me, or I've got QBE behind me, or I've got, State National with a terrific panel of reinsurers behind me, then I think that's fine. If I just go to the first thing you mentioned, because unfortunately our timing's not perfect from that point of view. We're actually doing some research now to try and uncover these attitudes in different national markets among people who are established underwriters at insurance companies as to how they see the MGA opportunity, whether they see it as an opportunity for them in career terms. Mm-hmm. And if they do, what is it that attracts them to MGAs? And if they don't, what is it that puts them off thinking about an MGA because that is the huge thing I think we've seen here in the US has been there's at some point, and you can't put your finger on exactly when it was, there's a sort of inflection point. And I think that even the pandemic may have had something to do with this, with people sort of sitting, doing their jobs and making, very decent money and in a very secure role at a big insurance company, but having been maybe frustrated for years by technology and the challenges that large insurance companies have with technology, may be frustrated for years with the fact that they don't think they're getting as much value as their team is contributing to the insurance company. And then looking over the fence, so to speak, at the MGA sector and looking at the value that those companies have been able to build. And so I think that then there was an enormous deluge of really capable, smart people when moving across to MGAs in the US. Now, we have yet to see that definitely in most of continental Europe. And so that's why we thought it would be interesting to try and see what people's attitudes were. And I think we will see probably a greater conservatism, in Europe than we've seen in the US. But everybody reads the newspapers, everybody reads, I write a lot write monthly column for the insurer. People read what's happening in the insurer and they can see that the value that MGAs are creating around the world. So I think that change will happen in Europe as well.
How big, William, do you think this space can really get? We get asked a lot as well, are we at the zenith of the MGA journey, particularly in the US, where it's already so well established and covers a reasonable percentage of the market? How big can this sector go? Is it set to grow more, or have we reached the kind of peak?
I definitely don't think we've reached the peak. And some of the markets, there will always be dislocated and distressed markets. So that's one dimension of it. There's an MGA there are a bunch of MGAs in California that are focusing on the homeowners market, and they've been seeing significant growth in recent years. And so I think that'll be a source of opportunity. The cyber market is definitely going to continue to grow, and MGAs are very active in the cyber market. And I think to your point, Peter, I think you want to focus on a line of business that's got some sort of specialist dimension to it. It can't be a totally commoditized line of business, because that's where the Progressives and the Geicos in the auto industry, sort of have some advantage, for example. But it's hard to put a firm ceiling on that. I think that the totality of the E&S market in the US is fair game, frankly, for MGAs. And that's been growing at a double-digit rate for a long time now. And, I think that's widely expected to go on growing.
Yeah, there's one thing, and this may well have been your analogy, William, when we spoke before. So I'll credit you, even if it wasn't, I heard it somewhere else. But someone told me the other day that MGAs are like the population of Australia. They're kind of sitting on the coastal region, the outside, and there's still all this opportunity within to go and explore. So I do feel that. I feel that in the internet.
Well, yes, I can't remember whether we did talk about that, Peter, but I think
it sounds like your analogy to me.
I think it's very true, because one of the things in insurance is that it's a smaller market than it could be, right? There's a lot of risk out there. People talk about protection gaps. There are huge protection gaps. An area like cyber has got enormous protection gaps relative to the cost of cyber incidents and the proportion that's actually insured. And so that sort of hinterland of uninsured risk at the moment is at play if it can be underwritten in a profitable way, and also if the insurance cannot cost too much. You can't have the insurance costing an arm and a leg, and therefore it's not really worth buying. And I think MGAs can play a role in and they are one thing we haven't talked about, which lots of people have talked about, and I know you're sort of very engaged with, is the role of MGAs as vectors for new technology and new uses of data into the insurance market. And I think that is absolutely going to continue. I think that's a function of their structure, and they are much better equipped at exploiting technology in that way than large insurance companies are.
Or even there was Insurtech New York a couple of weeks ago. There was a panel on carriers using MGAs just to experiment internally. I think Arch was on, a few others. That's I think that's going to become more common. It's easy to kind of remove the brand name. You can experiment at the edges. You can even give some of those people internally to your team that maybe are frustrated and are thinking about going and starting their own thing, the opportunity to be an internal entrepreneur. So there's a lot of value, I think, in larger organizations using MGAs to experiment as well.
Absolutely. And that's a historic thing, Doug, isn't it? I mean, that's something that you've done for a long time. I think that the change now a bit is that more companies are looking at business that might have historically said that's core, right? We're never gonna outsource that to an MGA, and saying, well, these guys actually seem to have a really good way of writing this business, or they've got data that we haven't got, or whatever, or they've got the best underwriters, or maybe we just lost our best underwriters to this organization. What do we do now? Do we stay with them, or do we, in a fit of pique, say, no, we're not gonna provide you with capacity? So all of those sort of situations, I think, mean that historic thing where you might say, yes, this is something we can dip our toe into through an MGA. Absolutely, that remains the case. But also, I think they're also looking at more core business that they could possibly write, more profitably through an MGA as well.
William, I want to bring it back to the fronting conversation that we were having. Yeah. And you had mentioned a 4x growth, over X period of time. With that taking place, and I think this might be interesting for listeners that are in that journey of looking for a front right now, what's important, what they should be getting out of a front. Are you seeing fronts become more competitive, whether it's on their take or services that they offer, maybe combining some actuarial work and throwing that in, or operational infrastructure, compliance infrastructure? What are you seeing? Like, is it becoming more competitive because of the growth there, or is it just really meeting the demand of MGAs still at this point?
No, I think it is becoming more competitive. I don't think the fees are coming down dramatically, for fronting fees. One question is, it's a two-stage process, right? If you work with most fronts. So you go to the front and they say, okay, they go through the due diligence process and they'll say, yes, we will support you and we will provide you with X% of your capacity needs ourselves. But then you have to go to the reinsurance markets to get the rest. And that is a two-stage process, right? That's not sort of sewn up. You're a kind of warm lead for the reinsurance market, so to speak, because you're backed by this front, but you still got to actually negotiate the balance of the capacity. Now, as you know, the accelerant model is different from that. With the accelerant model, the reinsurance capacity is bound in. And so it can be a shorter process in that sense. And I think that there'll be some, I think people will be looking at the process because it is a very long process. That's the other thing about it. It can take a year or more to negotiate this through those two stages. So I think that's something which one should sort of watch in future as to how that evolves. And so far, that hasn't evolved, I don't think, as well for MGAs as you might hope. It is still an extremely long, painful process. Maybe there's part of it has to be like that because you need to sort of see the whites of people's eyes and you need to really get to know them and trust them. And to your point, it's a partnership. And how does that work? Can you build a partnership in a short space of time? Maybe that's difficult to do. But I still think frictionally the process takes longer and is harder maybe than it should be. And I think that there is a lot of competition among fronting companies to provide different services. I think Incline in particular has been sort of looking at the ways in which they can support MGAs through different services. So you can see a little bit of almost a kind of platform model evolving on the fronting side. I mean, obviously the key thing is, or a key thing is the technology and how the MGA can plug into the technology that the fronting company has and how that information can also be shared with the reinsurance markets and what's the kind of speed and transparency of that process. Because the more you can provide something where people are really confident in the data they're receiving and they're receiving data in a timely basis, the easier the relationship I think will be for everybody. So that's a big dimension of the whole thing.
Well said. And I think after sending us to therapy earlier in the conversation, you hit all of those people have gone through or are currently going through the process of getting capacity, their fronting and reinsurance, and they're all just They've opened up drinks at this point. They are feeling it. They're making appointments with their therapists. You were selling lots of pharmaceuticals right now from just the stress from that process. So
once that 3-month period, they're like, I'm going to do this in 3 months. Like,
yeah, we're going to launch in 3 months.
1 year and 3 months.
But you see, I mean, it can be really frustrating that, because if there's a market opportunity, rates are high now, and you can just see that opportunity, and then it takes you a year or more to actually grasp that opportunity. That's very frustrating.
Sure
Timing is important in our business, as in every business, really, and so that's a real source of frustration.
Yep. Yeah. I liken it a little bit to if you're selling a product and you have to set up your manufacturing in the background. And again, from the outside, it sounds quite easy, but it probably takes a lot of effort and infrastructure to get right. It feels like capacity is the same for MGAs, and must be a frustration, like you said, because in that time of delay, new people can come and compete for that opportunity that you're waiting to get to.
Yeah, I think the difference, though, Peter, is that a lot of industries, the paths are clearer, to be honest. Yeah. I mean, I have a friend who set up a toothpaste business, and, he could plug into a whole lot of structures in the supply chain in order to do that. And yes, he did have issues about where the tubes came from, and, and maybe the Trump tariffs will make those issues more challenging, and et cetera, et cetera, et cetera. But the thing with insurance, I think, is there's a lack of clarity very often about how you do these things. And I don't think we share knowledge or understanding in insurance very well. I mean, the thing which amuses me, it's a sort of very small sort of anecdotal thing, but I was just thinking about the weird language that is used to talk about insurance. There's a big market in the US, which we talked about earlier, commonly called the E&S market now, which is officially in regulatory terms called the non-admitted market. So you've got regulators who are admitting business be done, but it's not admitted, which is a sort of contradiction. On the reinsurance side, you've got authorized insurers and you've got unauthorized reinsurers. And of course, they are effectively authorized, the unauthorized reinsurers. They just have to post collateral. That's the meaning of unauthorized reinsurance. But on the face of it, it looks as if, how can anybody be transacting unauthorized reinsurance? It's not authorized. So I mean, those are just two sort of small illustrations, but I do think that's a sort of endemic problem within the industry, is that it's sort of steeped in jargon that means actually different things to different people in some situations. And it's hard to navigate. And if you're a real entrepreneur, you're moving outside your historic comfort zone of writing whatever class of business it might be into all the operational dimensions of setting up a company. That's really hard.
So how do we get that education out there, right? And that's what we're trying to do. That's one
I think
of our
things like
goals.
this, Dylan, are absolutely part of it. I think that there are people that know how the wheels of this market work, and I think it's desirable. So one of the things that we're looking to do in Europe is really start to create more of an opportunity for MGAs and capacity providers to come together, and for people who can advise those companies to come together and help them help them bring the market forward, bring the industry forward, which is what Target Markets, for example, has done historically here in the US. They've been going for more than 20 years now. And that is a huge source of insight and knowledge, and it brings the overall knowledge level up within the market. And so I think that we've got, as I mentioned, the NVGA in the Netherlands. There's the MGAA, which does fantastic work in the UK. There's an organization called ASASE, which is a relatively young MGA association in Spain, which I think you probably know, Peter. And so I think everything that they're doing is good. I think there will be some value, and this is something which we're talking to people about, in having a more of a pan-European approach to that as well, and an opportunity for people to come together from different parts of Europe and share insights and knowledge. So I think all of that sort of thing is good. You can have also some formal training, right? I mean, there's some initiatives of that kind, which I think are valuable too. There's plenty of that you can do at the broad insurance level, but there are a lot of specific issues that MGAs confront too.
Could you help discuss some of those? Because again, all the associations you just mentioned are obviously great for people to get into. I think that also, I haven't talked to Doug and Peter yet, but I think we should probably invite members from those organizations onto the show. Let them know what the resources are, how they can access that information. Because you can't just answer everybody's questions on the show, but to give them the direct resources of what they can find out there, where they can learn it, and be specific is certainly part of our mission. So
I'd be very happy to put you in touch with, with Mike Keating at the MGA. If you don't already know Mike, with Valentina Visser at the NVGA, I think I agree they would be great people to have on the show.
Where else are you seeing, besides those organizations, places for people to get education, right? Obviously in the States, and I don't know their involvement abroad, but CPCU Institutes has certainly been quite good. However, as I just a week ago mentioned, and was not at all trying to say the Institutes is failing in any way, but I did mention, right, that there's not a great place to get all the information specifically about building an MGA. They have, I didn't put this on my LinkedIn post, but was mentioning there is a Institute's course about running an agency. And I thought that was fantastic. I'd love to see them build the MGA version of that. And maybe
Target Markets does some things in that respect.
And it's quite low cost for an MGA to join Target Markets, right?
Yes. Yeah. That's in common with all of them, Doug. Same with the MGAA as well. It's not an expensive thing for the MGAs. It's relatively more expensive for the carriers, and then if you're a service provider,
tell me about it. I just emptied my bank account.
We're also members, Doug, and yes, it's not cheap. No.
But great organization.
I think,
just to be clear, great organization.
To your point, I'm happy to be stand corrected on this, but I think if you're a French MGA or you're an Italian MGA and or you're an aspirant MGA in those countries and you want to understand how you do it, I don't think there is a lot of training out there or things you can really easily plug into.
They should absolutely be getting in touch with you, William. I think that's the clearest answer, right?
Yes, it is something I'm really passionate about, Peter. I mean, just sort of by way of illustration, earlier in my career, we did something when I was at Beazley, which was incredibly valuable, I think, for the Lloyd's market, which was called for a time the Andrew Beazley Broker Academy. It was bringing brokers into the Lloyd's market and helping them understand over a period of a week how Lloyd's worked. And the thing with Lloyd's is there's almost no substitute really for coming to London and spending some time and getting real immersion in a structured way in that. And so I think that sort of thing in the MGA space over a longer period is really valuable, because to the points you've been making, there's a lot of knowledge out there to be shared about how these businesses work. And I think Doug's point right at the beginning about it being a partnership business is almost sort of central to that. Okay, so what does that mean and how do you manage the partnership? And, there's a legal dimension to that. What does the binding authority agreement look like? And how do you ensure that interests are properly represented in that and your interests are aligned with your capacity providers in appropriate ways and all that kind of good stuff? It's complicated. There's a lot to learn there. So I think that there's real value in all of that.
Yeah. William, this has been incredible. It's great to hear your passion, your energy for this space. You speak with such great authority on it globally, and I think everyone's going to want to, who listens to this, is going to want to reach out. They should definitely go to lexiconassociates.com and get these reports that are pretty unique, I think, in the market for what they cover. So go there and do that. We love to end these shows with your idea of legacy. That could be as grandiose as you like. It's focused on, your legacy here in this insurance space. You covered a lot, but what do you want that to look like? What do you want that to be?
Goodness. So I think that MGAs, as we talked about earlier, are a beneficial influence on the insurance business. I think insofar as they can help insurance play a bigger role in society, and there is no lack of concerns around risks that we all confront, that would be a great thing. And so in a modest way, Peter, I hope I can contribute to that. I think I am very bullish on insurance. I'm happy, if you go back to the beginning of the conversation, that I thought that my interest in fine art sort of led me into the insurance market. I don't regard that as an unfortunate step at all. I think it's been great. And so I think MGAs are a sort of internal revolution within the insurance industry that should have very beneficial effects, not just for the insurance industry, but for everybody who relies on the insurance industry. And I'd like to contribute to that.
Amazing. Great.
We love it.
Thanks so much, William. Great to have had you on.
Thank you very much.
Great to
It was
have you
really
on.
nice chatting with all of you.
We'll have to grab dinner sometime in the city. In fact, what I'm going to have you do with your fine arts degree and training is take me around to a museum and educate me a bit.
Well, the Met is on our doorstep,
Again.
Doug. So why don't we can have lunch at the Met one day if you like?
That's
really
perfect.
Nice.
We'll do
That's
that.
great.
We'll get Dylan up to New York even.
I'd love that. Yes, that's right. Where are you, Dylan? Now you're in
Richmond, Virginia.
Virginia?
Really the home of E&S. So
That's
we have a ton of E&S carriers here. You mentioned State at Nashville, right? We've got Markel based here, Kinsale, James River Insurance, Richmond National, Hamilton.
Wow,
E&S.
yes, I hadn't really thought. I mean, of course they're all there, aren't they?
Yeah.
I haven't been there since my wife ran the Richmond Marathon a few years ago.
Nice.
It's usually me that runs the marathon, but she did that one. She absolutely loved it, and it's a great city. So,
Well, if you're ever down here, I'm happy to host you.
that would be great. That'd be great. Excellent. All
Super,
right.
William.
Thank you, guys.
Thank you so much for your
Nice to
time.
see you.
Thanks so much, William.
Have a
Thank
good
you.
one. Bye-bye.
Bye.
Bill. Another great guest. I think Peter, you're on a real roll here. Listen, I'm going to say he had me at the Netherlands when we were chatting early.
really
Proud
like
father
that, yeah.
moment this morning. Woke up, kids are on spring break. Went downstairs, saw my son watching Max Verstappen F1 highlights. I was like, thank God. But William, what a knowledgeable guy. Interesting background, on brand for being a Brit. Love the fine arts stuff. But yeah, so just knows everything about the space. I could have talked to him for a couple more hours, and we'll try to do so later on, I think.
Well, I want to just pour through his reports.
Yeah.
I'm sure I can spend a lot of time there, but the reality is these are the types of things that save you time in the future. So I've said this, I think it was when we had our LinkedIn Live event, which really is, the first time we came together for a recording. We're talking through this concept of making sure that we are, as a entrepreneur, that we bring in the smartest people, the people who have the most information about that very specific niche that you have about building an MGA, because it's going to be the way that you fast forward through all the nonsense, all the noise. Do you know all 50 states compliance? As a normal individual, even if you were a producer, you were an underwriter for years, you just don't know these things because you had someone in an operations side of your carrier doing this for you. They were getting all of your licenses for you. You just had to go get your fingerprints done. You just had to sign the forms that they provided to you. Generally, that's done for you. So how do you know how to do 50 state compliance for an MGA and for you as an individual? How do you know how to set up the claims department? How do you know how to build a policy administration system from scratch? How do you get through the actuarial component of this? How do I rate this? All those little pieces, they add up, and you have to be an expert in so many things. But the reality is you don't have to be that expert. You have experts around you, and they don't have to be a full-time employee. You hire in people who know those areas, those specific niches, a sub-niche within MGAs, and they're going to be able to help you so much faster and for so much cheaper than trying to hire an individual for each one of those different issues. So,
yeah, 100%. Okay. Guys, we're getting some great guests here. I feel like we're really using this show to its extent. I mean, it's scratching the itches that I have, people I want to meet, and I'm really excited about who we're having on. We got to hang out with Will in the city, 100%. We're going to him on the pizza tour. He's going to come along with us. We're going to break him of this New Haven pizza love, and we're going to get him into the New York slice again. Yeah. What do you guys got going on the rest of the week here? We're towards the end of the week. Peter, you just ran a marathon. You had a baby. You ran a marathon. I think you had said the other day.
It was a half marathon.
Yeah, well, just half.
Yeah,
that's like 100%, 100 times more than I've run in the last year. Just I'm going to add it up. My math's right.
To be fair, I don't have your running pedigree, Doug, so we can't get into that conversation too much. But no, obviously that's another thing William just dropped to the end there, just casually, that he's also running marathons in between being complete expert in all of this space. So very modest, very humble, incredibly intelligent guy, right, in the space. So I'm sure lots of people will be reaching out to him, and as you said, Dylan, getting hold of those reports.
Yeah, absolutely.
Right. All right, guys. Well, I think we had another recording next week. Looking forward to seeing you all then. Peter, we're going to be hanging out soon.
Yeah.
Dylan, us too. We'll be out in Chicago hitting a Cubs game, I think.
Yep.
And then we'll be in Columbus also soon. That's in June. Soon.
Peter, I want you to start working on your Harry Carey impersonation. We're gonna grill you on that. We're going to want to see it. Get some real Chicago guys hanging out with us on that Saturday.
Peter, can you do any regional U.S. accent? I'd love to hear it.
I don't think I could do any. I'll tell you what, I promise you I'll work on it. Next show, it'll be on there.
All right, sounds good.
Great.
All right.
All right, guys. Have a great day. We'll chat soon. And thank you, everyone, for listening.
Good stuff. Thank you.